Morning everyone. So in the last class we understood how exactly are we supposed to prepare this cash flow statement under direct method and indirect method. Okay, so I hope you guys are aware of this particular format and you guys went through this particular format. So let's continue our discussion and look into this next illustration, that is illustration number 11. Let me read this illustration for you guys. The following is the income statement of XYZ Limited for the year 2021. Okay, so sales they have given 1,62,700, equity in ABC companies earning 6,000, and then they have given you expenses, which is cost of goods sold, salaries. We have got depreciation, insurance, research and development, patent amortization. Then they have given interest, bad debts, income tax, the current year tax, and then the deferred. So when it comes to cash flow statement, the amount what we are supposed to deduct would only be the current year tax. All right. So the total taxes is how much. This amount should actually come over here. This is 8,150. That is the sum of these two. The total expenses is 1,54,650, and then the net income, that is the profit, is 14,050. All right. Let's look into the additional information which they have provided. So they have given 70% of the gross revenue, okay, from sales were on credit basis. So 70% of the sales is on credit basis, the remaining 30% is on cash basis. Merchandise purchased amounted to 92,000, which were on credit. Salaries payable total 1,600 at the end of the year. This is the outstanding salary at the end of the year. Amortization on premium of bonds payable was 1,350. So we are supposed to pay some premium on bonds to the extent of 1,350. No dividend were received from the other company. So this particular income what they have given, 6,000 rupees, this is the income with respect to dividend, and they have clearly mentioned that this is not been received. So there is no cash inflow related to the same. Okay, so we have just earned the 6,000 rupees, but we haven't received it yet. So this will not appear in our cash flow statement. Okay, so after this, let's see the other information what they have given. XYZ company declares a cash dividend of 4,000. Changes in the current assets and current liabilities were as follows. So they have given the increase as positive and decrease as negative. All right. So there's an increase in the cash to the extent of 500, marketable securities to the extent of 1,600, account receivable, okay, that is debtors, there's a decrease of 7,150, allowance for bad debts, okay, 1,900, inventory, that is stock, 2,700 increase, prepaid insurance, account payables both have increased, salaries payable and dividend payable both has been decreased. Okay, so prepare a statement showing the amount of cash flow from operations. They're just asking us to prepare the cash flow from operating activities. All right, so let's just solve this. In the books of XYZ Limited, we'll be preparing the cash flow statement for the year ended 31st March 2021. All right, so this is what they're asking us to prepare. Let's just prepare this. Particulars, amount and amount. They're not asking us to prepare the full-fledged cash flow statement. They're just asking us to find out how much exactly is the cash flow from operating activities. Okay, so we'll just be doing, I will just be calculating only that much. Cash flow from operating activities. All right, so here we'll just be following the direct method. So first thing would be the cash sales. Okay, so from the total sales, 30% would amount to cash sales and we'll be receiving that much of amount immediately. Okay, what was the total sales? Look at this total sales, 1,62,700. Out of 1,62,700, 30% is in the form of cash. So 1,62,700 into 30%, this would be 48,810. So 48,810 rupees we are collecting in the form of cash immediately. All right. Now let's talk about the amount received from the debtors. Okay, so for this we'll just be preparing a debtors ledger and we'll just be referring to that. Okay, so debtors ledger. Okay, so here they have given some increase or decrease in receivable and payable, right? So this statement you need to understand properly. So they haven't given any opening balance or closing balance, but they have given you some increase or decrease. Look at this. So if you see the increase or decrease in the current assets and current liability, debtors, okay, which is trade receivable. Okay, so here it is, account receivable. Look at this. They are told that there is a decrease of 7,150. Okay, so decrease in debtors rupees 7,150. Now where do I show this? Yes, where do I show this? So for this you need to understand how exactly do we calculate this changes in debtors. Okay, so changes in debtors will be equal to opening balance minus closing balance. Okay, so opening minus closing balance, I'm getting some negative amount. Okay, so if you see over here they have told negative. Okay, decrease in debtors or change in debtors negative. Okay, so when they are telling change in debtors negative, it means there is a decrease in debtors. Hope you guys understood this. Okay, so here there is a decrease to the extent of how much? To the extent of 7,150. Now how do I show this particular amount? Okay, should I be adding it? Should I be deducting it? Should I be showing it on the debit side, credit side? How do I find out? Very simple thing. Look at this. Alright, let me just repeat this particular concept. So here they have told that the debtors balance, look at this, debtors balance, it is decreased by 7,150. Okay, you should be getting negative. How will you be getting negative? Look at this particular example. Only if, how do I calculate the changes in debtors? Opening balance minus closing balance. Only if the closing balance is greater than the opening balance, I'll be getting negative amount. Look at this. Let's assume that the opening balance is 10,000, closing balance is 17,150. So I'll be getting a negative of 7,150. Okay. So one way of presentation would be what? Opening balance I'm writing it on the debit side because it is receivable, and closing 17,150 I'm writing it on the credit side. Or if you just want to give effect for this net balance, okay, so how much is the net difference? 7,150. If you balance this ledger, the total on the credit side is more. Same total you will be writing it on the debit side. Here you will be getting a balancing figure of 7,150. Okay, so two changes in data, 7,150. Okay, so therefore the 7,150 rupees should appear on the debit side. Same thing I've done it over here. 7,150 I've showed it on the debit side. Now here they have also given us some sales. Okay, 70% is on credit basis. So out of total sales, you know the entry for credit sales, right? Debtors account debit to sales account. Okay, 1,62,700 into 70%, that is 1,13,890. Okay, this would be my credit sales. Clear? Okay, have they given any other information? In this particular question, they had given some information pertaining to bad debts. How much is the bad debts? Bad debts, if you see, it is 2,050. Okay, so you know the entry for bad debts, right? Bad debts account debtor to debtors account. So here I'll just be writing by bad debts. But look at the adjustment. Okay, so adjustment, if you see, out of this 2,050, there is some information which is given pertaining to bad debts. Look at this. Allowance for bad debts, there is a decrease of 1,900. So what I'll do is 2,050 minus 1,900. There is a decrease to the extent of 1,900. So how much do we get? The net amount? The actual bad debts which I'll be giving effect to the debtors account would be 150. The remaining 1,900 will be adjusted from the provision. Clear? So 150 rupees. Now look at this. If I close this particular ledger, I'll get to know how much exactly is the cash which I received from debtors. So 1,21,040 minus 150. Okay, so 1,20,890 is the amount which I received from the debtors. So by bank account, this would be the balancing figure. So in my cash flow statement, I'll just be updating this information. Cash received from debtors 1,20,890. Okay, cash received from debtors 1,20,890. Similarly, I just need to find out how much exactly is the cash which I paid to creditors. Okay, so cash paid to creditors. Okay, so for this, refer creditors ledger. Similarly, I'll be preparing one more ledger, that is creditors ledger. Okay, same concept I need to apply even in this case. So only thing is, instead of calling it as debtors, here we'll be calling it as creditors. Alright. Now you guys try and tell me, when it comes to changes in creditors, okay, how am I supposed to give effect? Okay, so changes in creditors, if you see, how much have they given? Have they given positive or negative amount? Account payable, 5,650 positive amount they have given, 5,650, okay, positive amount they have given. Now when do you think you will be getting positive amount? Yes, so in this case, the opening balance is greater than the closing balance, okay, hence we are getting positive amount, okay. So therefore the net difference of rupees 5,650, okay, where will it appear? Look at this. Similarly, if I prepare this creditors account, okay, so let's say opening balance is 15,650, okay, and then the closing balance is 10,000. So just for the sake of understanding, I'm taking these figures, okay. So look at the net amount. Here you will be getting positive, okay, so positive 5,650. Now opening balance, where will it appear? It will appear on the credit side, right? So by balance brought down 15,650, and then the closing balance, to balance carried down, this will appear on the credit side, 10,000. So where will you be showing the difference? So either you can show it like this, opening or closing. If you just want to show the difference or the net amount, so 5,650 rupees will appear on the debit side, okay, this will appear on the debit side. Hence the difference of 5,650 shall appear on the debit side, okay. So on the debit side, I'll just be writing to difference in creditors, okay, or change in creditors value. How much? 5,650. All right. So after this, if you see the adjustment, that given us information about the purchases. Merchandise purchased amounted to 92,000. Okay. So what will be the entry for purchases? Purchase account data to creditors. So on the credit side, I'll just be writing by purchases account 92,000. Okay. So once you are done with this, do we have anything else? Nothing, right? So you can just close this particular account in order to find out what exactly is the amount what we paid. So 92,000 minus 5,650 to bank account. This would be the balancing figure. This would be the amount what we paid to the creditors, 9,14,350. Okay, so amount paid to creditors. This is not 9. This is 92,000, right? 10 less, yeah. So this would be the amount which is paid to the creditors, 86,350. Okay, so 86,350. As this is outflow, I'm just writing it as negative amount. This is the amount which is actually paid to the creditors. Simple. Now once you are done with this, okay, so if at all there is any other amount which we paid, we'll just keep on deducting. Okay, we have got other outflows. Okay, let's look into these things. So we have got salaries paid. Okay, so salary paid. The amount which is given in the P&L account, it is 34,400, and here if you see outstanding salary, there is a reduction. Okay, so outstanding salary, there was a reduction of how much? 2,050, this amount. So outstanding salary, if it is reduced, what does it mean? It means it was paid. Only if it is paid, the amount will get reduced. So last year amount which was pending has been paid. That's why the outstanding salary has been reduced. So I'll just be adding this. Why am I adding this? Because this 2,050 rupees was paid. As a result, the outstanding salary has been reduced. Okay. So total amount which is paid would be how much? This would be 34,400 plus 2,050. Okay. 36,450 is the amount which is actually paid. Clear? All right. So after this, what else? So salary paid has been taken care. Depreciation, see, cost of goods sold, again taken care. The amount which is paid to the creditors taken care. Depreciation, non-cash item, will not be considering. Insurance, yes, we need to show. Okay, less insurance. So we are paying 500 rupees towards insurance, and there was one more adjustment if you see relating to insurance. What was it? Prepaid insurance 700. So it means insurance relating to next year is being paid in the current year. So don't you think totally along with this 500, I'm also paying 700 rupees of insurance relating to next year. Okay, I'm paying this amount in advance. So totally how much is the insurance which I paid? 1200 rupees is the insurance which I paid. Is this clear? All these are outflow, that's why I'm just writing it as negative amount. So insurance I paid to the extent of 1200. Okay, so once we are done with this insurance, let's just look into the next item. So research and development cost 1250. Even this is something related to business. 1250 research and development cost less R&D cost. Okay, so after research and development, patent amortization, this is non-cash in nature, we need not show the same. Interest 10,650. See, this is the interest on the short-term loan similar to the bank overdraft which was purchased for the purpose of managing the business. Any loan which you are taking for the purpose of managing the business, that would be treated as operating expenses. Any long-term borrowings like debentures, okay, or bank loan, long-term bank loan or borrowing, that would be treated as financing activity. Okay, now look at this. Interest paid 10,650 is the interest which I paid. Along with this, if you see, one of the adjustment what they mentioned was premium on bonds which is payable. Okay, 1,350. Okay, so along with this 1,350 of premium on bonds also I'm paying. So 10,650 plus 1,350, totally I'll be paying 12,000 rupees. Okay, that is premium as well as interest put together. So interest portion done. Bad debts, again it is non-cash in nature, you need not worry of it. So this is non-cash again. Income tax, will be showing it separately. Okay, any income taxes, only this amount will be showing, the tax paid for the current year. Alright. So do we have anything else? That's all? Alright. So let us just calculate this. So here we'll get to know the cash flow from operating activity before income tax. Okay, so that would be how much? 32,450. This is cash flow from operating activities before tax. Okay, cash flow from operating activities before tax. From this I'll be deducting the taxes. Okay, so from this I'll just be deducting the taxes which is paid during the current year less taxes paid. So how much is the taxes which was actually paid? Only the 6,600 is what we need to consider. Okay, so minus 6,600. So in this way we'll get to know how much is the net cash flow from operating activity. Okay, so net cash flow from operating activities. 25,850 is the amount what we got. Okay, let's just cross check. Yeah, look at this. 25,850, absolutely the same. Is this clear? I hope you all understood this. Anybody having any doubt, any confusion? Is this illustration clear? Alright. Alright, so let's just have a look at the next illustration, that is illustration number 12. Let me read this illustration for you guys. From the following information contained in the income statement and balance sheet of A Limited, prepare the cash flow statement. So here they are asking us to prepare the full-fledged cash flow statement. Okay, so let's read this. So this is the income statement, which is nothing but the profit and loss account. They have given the net sales as 2.52 crores, 252 lakhs. Okay, so less cash cost of sales, that is 198 lakh. Depreciation we have got 6 lakh. Salaries and wages 24 lakh. Operating expenses 8 lakh, provision for taxes 8 lakh 80,000, total expenses is 2.44 crore. Okay, so 2 crore 44 lakh 80,000. Net operating profit has been given 7 lakh 20,000. Non-recurring income, that is profit on sale of investment. Okay, this is something related to investment activity. Okay, 1 lakh 20,000. So total profit will be 8 lakh 40. That is nothing but the sum of these two. Okay. So retained earning out of this total profit. Okay, so we are retaining some profits which is brought forward. The opening balance of the balance in the P&L account and reserve, how much is it? 15 lakh 18,000. Okay, so this would be the sum of these two. Okay, the sum of these two would be 23 lakh 58,000. dividend declared and paid during the year. This is the dividend which was paid. Okay, dividend paid would be treated as what? As a part of financing activities. All right. So profit or loss balance on 31st March, it is given as 16,38,000. So after this, they have given you the balance sheet. Let's just look into the balance sheet. So shareholders fund, they have given the share capital. Look at the years. This is at the end of current year and this is at the end of previous year. Okay, so this is current year and this is previous year. Okay, so this would be the closing balance, this would be the opening balance. All right. So share capital is being given from 36 lakh, it is increased to 44 lakh 40,000. Reserves and surplus from 15.18, it is increased to 16.38. Okay. So liabilities, we have got current liabilities, trade payables, other current liability and short-term provisions. Assets, we have got property, plant and equipment from 28.8 lakh, it is increased to 54 lakh. Current assets, we have got inventory, trade receivable, cash and cash equivalent and short-term loans and advances. Okay. So let's look into the other information. Relevant items of assets and liabilities are reflected in the balance sheet and schedule 3. Hence, sub-items not having any value for the given illustration is not shown. Okay. So only those things which has got the value, they are just showing it as notes to accounts. Look at this notes to accounts. Property, plant and equipment, we have got two assets, land and then building and equipment. Okay. So land will not be charging any depreciation. So previously we had 4 lakh 80, now it is 9 lakh 60,000 rupees. And then building, okay, 57 lakh 60,000 on which we have charged depreciation. This is the closing balance. Okay, same way they have showed it for the last year also. All right. So then short term provision, we have got income tax payable 1 lakh 32 and 1 lakh 20,000. Other current liabilities, we have got outstanding expenses 4 lakh 80 and 2 lakh 40. Short term loans and advances from 78,000, it is increased to 90,000. Okay. Original cost of equipment sold during the year was 7 lakh 20,000. This is the original cost of the equipment which is sold. All right. So they're just asking us to prepare the cash flow statement. Okay. Just go through this particular illustration. We'll be solving this. Just go through the illustration once. Shall we start? All right. So let's just prepare this cash flow statement. In the books of, what's the name of the entity? A Limited, right? So in the books of A Limited, cash flow statement for the year ended 31st March 2021. Yes. Particulars, amount and amount. So here they have given you the profit information. So we'll be following the indirect method. So how much is the net profit which has been given? Yes. Look at the net profit. How much is it? Yes. So it would be this amount. Okay. So net operating profit they have given 7,20,000 rupees. Before tax is what we require. So we'll just be adding this particular tax amount. Okay. So net profit before tax and extraordinary item. Okay. So see here 7,20,000, I am not including any extraordinary item. Okay. So if you are considering this 8,40,000, so 8,40,000 you need to deduct this extraordinary income of 1,20,000 and then add this tax of 8,80,000. So anyway I am not considering this 1,20,000, so therefore ordinary income 7,20,000 plus the taxes, okay, which is 8,80,000. So how much would be the total? 7,20,000 plus 8,80,000, this would be like 16 lakh rupees. So 16 lakh rupees would be the net profit, okay, before extraordinary item and taxes. Okay, to this I'll be adding the non-cash items. Okay, so add non-cash expenses and expenses or items other than operating activities. Okay, so first thing which I'll be adding back would be the depreciation. Okay, so how much is the depreciation which has been given? They've already given the depreciation amounts to 6 lakh rupees. So this 6 lakh rupees is what I'll be adding back. Yeah, 6 lakh added. So depreciation taken care. Now same way you also need to check out for any transaction which is other than operating activity, that is any expenses which is related to financing activity and investment activity. Okay, so let's just look into this. Okay, so salary and wages, provision for tax, that's all. Okay, so what would be the total? Here we don't have anything else. Do we have anything else? No, nothing. Okay, so what would be the total of this? This would be 22 lakhs. Alright. So this will be called as what? This would be called as cash flow from operating activities before working capital changes. Okay, so this is the cash flow from operating activities before working capital changes. Now I'll be adding, okay, so I'll be adding decrease in working capital. So what will amount to decrease in working capital? Two things. Okay, so either increase in current liability or decrease in current assets. Okay, so same way I'll be deducting increase in working capital. Okay, so what would lead to increase in the working capital? Increase in current asset and decrease in current liabilities. Alright, so let's just look into the current assets and current liabilities and see what changes are happening. Okay, so when it comes to current liabilities, look at this. We got trade payables. Okay, so from 24 lakh it has become 23 lakh 60,000. So is it increased or decreased? It is decreased. Now decrease in current liability, what are we supposed to do? We are supposed to deduct it. Okay, so decrease in trade payables. Okay, so trade payables, so from 24 lakh it has been decreased to 23 lakh 40,000. So it is reduced by 60,000. So 60,000 I'll be showing over here. Yeah, after this what else? So trade payables done. Okay, when it comes to other current liabilities, let's just look into the notes to accounts. So when it comes to other current liabilities, what do we have? Yes, we have got outstanding expenses, right? So what is happening to outstanding expenses? From 2 lakh 40 it has become 4 lakh 80. Okay, so there is an increase in the current liability. So what are we supposed to do? Increase in outstanding expenses. Okay, so outstanding expenses from 2 lakh 40,000 it has become how much? 4 lakh 80,000. Okay, there's an increase in outstanding expenses to the extent of how much? 2 lakh 40 minus 4 lakh 80. So this is 2 lakh 40 again. Alright, so this is also done or taken care. Other current liabilities taken care. So what else? Provisions will not be showing. Okay, short term provision, if you see, it is nothing but provision for income tax. Provisions we need not show. Okay, in the cash flow statement, only the income tax which is paid for the current year will be appearing. Okay, so let's look into the current assets. So current assets, if you see, we have got inventory. Now what happened to the inventory? Inventory from 26 lakh 40,000 it is become 9 lakh 60. It is reduced. Okay, so decrease in inventory. Where will I show it? Decrease in the current asset. I'll be showing it over here. Decrease in inventory. Okay, so what was the opening balance? Opening balance was 26 lakh 40,000. From this it has become 9 lakh 60,000. So it is reduced by how much? 26 lakh 40,000 minus 9 lakh 60,000. So it is reduced by 16 lakh 80,000. Okay, so it is reduced by 16 lakh 80,000. Alright, so 16 lakh 80,000 rupees. Inventory done. Then we have got trade receivables. Okay, let's talk about trade receivable. What is happening to trade receivable? Again, if you see, from 16 lakh 80,000 it has been increased. Okay, increase in the current asset. Okay, we'll be showing it over here. Increase in trade receivables. Okay, so trade receivable from 16 lakh 80,000 it is increased to how much? 18 lakh 60,000. Okay, how much is the difference? 16 lakh 80 minus 18 lakh 60. So this is 1 lakh 80,000 rupees. Okay, so 1 lakh 80,000 rupees, I'll just be deducting it. I hope you guys are getting this particular concept. Okay, so all these things we have already discussed, guys. Okay, the repetition of the same. Okay. Okay, so trade receivable done. Other than this, cash and cash equivalent will not be showing over here. At the end, we'll be adding. Okay, so do we have anything else? Just check once. Yeah, we have got short-term loans and advances, right? So what about short-term loans and advances? From 78,000, it is increased to 90,000. There's an increase in the current asset. Okay, so increase in short-term loans and advances. Okay, it has increased by how much? From 78,000, it has become 90,000. So there's an increase of 12,000 rupees. So which I need to deduct. That's all, I guess. Yeah. So now if you see the net impact, okay, let's just check the net impact. This would be the net cash flow from operating activities after working capital changes. Okay, so net cash flow from operating activities before tax. Okay, so this is the net cash flow from operating activities before tax. 37,60,000 rupees. Okay, so do we have anything else? Just check once. Have we left over anything? That's it. Okay, let's just cross verify. Cash generated from operating activity, how much did they get? 38,68,000, is it? Just a moment. 38,68,000. How much did we get? 37 lakh. This is not 1,20,000, right? 78 minus 90, this is 12,000. Yeah, 38,68,000 rupees, same amount. Do you find this? 38,68,000, we also got the same. This is the cash flow from operating activities before taxes. Okay, so from this, I'll be deducting the taxes which is being paid. Okay, so let's just calculate the taxes which is being paid, less taxes paid. Now, when it comes to taxes paid, how much is it? Yes, look at the taxes which is being paid. This is the provision for tax. This is not the tax which is actually being paid. We need to literally calculate the tax which is actually being paid. Okay, so let's just calculate it. Alright, so let me just show you how to calculate this taxes paid. Okay, so refer provision for tax account. Okay, I'll just be preparing this provision for tax ledger. Alright, so when it comes to provision for tax, under the short term provision they had given, right, how much is the opening balance and closing balance which they had given? Yes, what was the opening and closing balance? Refer this. Okay, so here short term provision, if you see 1,32,000 and 1,20,000, any provision will be showing credit balance, right? So by balance brought down is how much? 1,20,000. Okay, this is the opening balance in the provision. And what about the closing balance? To balance carried down, it is 1,20,000. Okay, so 1,32,000 it is. Now what about the provision which has been shown in the P&L account? Somewhere in the P&L account they have shown the provision, right? So how much is it? Let's check. 8,80,000 rupees is the amount. Okay, so 8,80,000 rupees is the amount. Now I need to calculate how much is the tax which I actually paid during the year. All right. Okay, so this provision whatever we created, you know the entry, right? Any provision you create, what will be the entry? P&L account debtor 8.8 lakh to provision for tax. Doesn't matter whether it is provision for tax, doesn't matter whether it is provision for bad debt, this would be the entry. Okay, this would be the entry. Now this entry, if I want to do the posting, okay, in this provision ledger, where will I be showing? On the credit side, right? So here on the credit side, I'll just be writing by P&L account. So 8,80,000 rupees is the provision which was created. Now close this particular ledger, you will get to know the taxes which you actually paid. Okay, so 1 crore is the total. Same total I'll be writing over here. From this 1 crore, if I just deduct this 1,32,000, 8,68,000 rupees is what we are getting. Okay, this is the actual amount of taxes paid. Okay, so 8,68,000 rupees would be the taxes which is paid. 8,68,000. Okay, so how much would be the net cash flow from operating activities after tax? So net cash flow from operating activity after tax, it would be how much? It would be 30 lakhs. Okay, let's just cross check with the solution. Yeah, absolutely the same. Do you find this? 30 lakh rupees. So once you are done with this, the next thing what you need to calculate would be the cash flow from investment activities, and then finally you will be calculating the cash flow from financing activity. Okay, so cash flow from investing activities or investment activities, both are one and the same. All right. So when it comes to investment activities, we'll be referring the long-term assets. Okay, so we'll be referring the long-term assets and investments. So when it comes to the balance sheet, look at this particular fixed assets, that is property, plant and equipment. Land from 4,80,000, it is increased to 9,60,000. It means you purchase some additional land. Okay, so purchase of land. Okay, so how much is the value of the land which I purchased? 4,80,000 was the opening balance. Closing balance, it became 9,60,000. So 9,60,000 minus 4,80,000. So 4,80,000 is what we purchased. This would be outflow. Okay, because when I purchase the land, obviously I'll be spending the amount, right? I would have made the payment, so this would be an outflow. Okay, so 4,80,000 rupees is the outflow. So building, if you see, 36 lakh rupees was the opening. Closing, it is 57,60,000. So what does this imply? So this will be giving information that you are additionally purchasing building. And what is the value? Yes, what is the value? And again over here, if you see, original cost of equipment sold also they have given 7,20,000 is the amount what they have given. Okay. All right, so let's just look into this. What is the original cost of the equipment sold? Equipment sold during the year 2021 was 7,20,000 rupees. Okay, this is the original cost of the equipment which is sold. Now, if you want to find out the value of this particular building and equipment which you purchased during the year, how will you calculate it? Okay, so in case you guys are getting confused, just prepare the ledger. Okay, this approach would be simple. Just prepare this building and equipment ledger. You will get to know how much is the value of the building which you purchased. Okay, so I'll just write it over here, building and equipment. Yeah, what about the opening balance? How much is the opening balance of building and equipment? This value, right? 36 lakh. Okay, so this is the opening balance, 36 lakh, and this is the closing balance. Okay, so two balance brought down. This would be 36 lakh. And what about the closing balance? 57,60,000. Okay, so by balance carried down 57,60,000. And then they have told that original cost of the equipment sold, okay, was how much? 7,20,000. When I'm selling it, obviously I'll be writing over here, right? Yes. All right. So here I'll just be writing by sale of equipment. This is not the amount which I received from the sale of equipment. Okay, this is just the original cost of the sale of this particular equipment. The amount which I receive would be completely different. Okay, let's not talk about that. So this is the original cost, because all the assets which are appearing over here will be appearing at the original cost. Now if I just close this particular ledger, the total on the credit side is more. Same total you will be writing it on the debit side. To bank account, the balancing figure you are getting, this would be representing the building which you purchased. Okay, so 28,80,000 rupees is the amount which you will be paying towards purchase of the building and equipment. Okay, so purchase of building and equipment. Okay, so refer building ledger. Okay, so how much are we getting? We got to know that it is 28,80,000. Okay, so 28,80,000. Till here, is there any doubt, any confusion? Is this simple? So 28,80,000 rupees is the amount which I spent towards purchase of building and equipment. Okay, so after this, so let's talk about the other information relating to investment activities. Okay, what are the other information which they have given? Yes, now the only thing is somewhere over here they have given that building or the equipment worth 7,20,000 of original cost was sold. Okay, so we know that there was some sale of equipment. Now when I say sale of equipment, obviously I would have received some amount, right? Now how much is the amount which I would have received? That is what we need to calculate. Okay, so let's just calculate it. Have they given any profit or loss which was made on this particular sale of equipment? Just check once in the P&L account. Yeah, here if you see they have given profit on sale of equipment. Do you find this? 1,20,000 rupees. So I'll just write it over here. Working note number 1, calculation of amount received from sale of equipment. Okay, so original cost of equipment sold was how much? 7,20,000 is what they have told. Okay, they have already told this information. 7,20,000 is the original cost. Now look at the accumulated depreciation. Okay, so have they given any information about the accumulated depreciation? Yes. So somewhere they had given information about the depreciation, right? So this is the depreciation for the current year, 13,20,000, and this is the depreciation for the last year. Is there any other information other than this with respect to depreciation? Yes. All right, look at this. I'll just be preparing this accumulated depreciation ledger. You can either call it as accumulated depreciation or provision for depreciation. Anything is fine. Yeah. So when it comes to provision for depreciation or accumulated depreciation, it would be showing a credit balance. So by balance brought down. How much is the opening balance? This amount. Okay, so this is the depreciation, right? So 12 lakh is the opening balance, 13,20,000 is the closing balance. 12 lakh. And what about closing balance? 2 balance carried down. This is 13,20,000. Okay, this is the closing balance. Now what about the depreciation which I charged during the year? Look at the P&L account. So somewhere they have given the depreciation information, right? 6 lakh rupees. This is the depreciation of the current year. So current year depreciation, what happens in case of accumulated depreciation? We'll just keep on transferring the amount to the provision for depreciation. So by depreciation, this is for the current year. Okay, so 6 lakh rupees is the depreciation. This is transferred. So now if you just close this particular ledger, okay, so 18 lakh minus 13,20,000, we are getting 4,80,000. This would be representing what? This would be representing the depreciation of equipment sold. This would be representing the balancing figure, which is nothing but depreciation of the equipment sold. Okay, so here in this particular working note, less total depreciation of equipment sold. How much is it? We have already calculated it. 4,80,000 rupees is the amount. Okay, 4,80,000. So this would be the book value. Okay, so book value of equipment sold. This is the book value. So I'm making profit over here, right? So if I'm making profit, I'll be adding. Okay, so add profit on sale. If I would have made a loss, I would have just deducted it, but in this case I made a profit, right? So profit on sale. How much is the profit which I earned with respect to the sale of equipment? Look at this, 1,20,000 rupees is the amount which I earned. Okay, so 1,20,000 is the profit which I earned. So total sale proceed which I would have received would be how much? 3,60,000. Okay, this is the amount received on sale of equipment. Clear? So sale of equipment, 3,60,000 rupees would be my inflow. This is my inflow because when I sell something, obviously I'll be receiving the funds. Okay, so if I just close this, what am I getting? Okay, so this would be the, just a second. Yeah, so this 30 lakh rupees would be what? This would be the net cash flow from investment activities. Is this clear? Okay, now the only thing which is left over is what? Financing activity, right? So let's just write this cash flow from financing activities. Now when it comes to financing activity, this will mainly be including what? Anything relating to your capital and long-term borrowings. Okay, so when it comes to equity share capital, look at this particular note. Where is it? The equity share capital, if you see, it is increased, right? So from 36 lakh, it is increased to 44 lakh 40,000. Okay, what does it mean? Yes, it is increased. It means the company would have issued some shares and they would have received some amount, right? So receipt from issue of equity shares. So from 36 lakh, it has become 44 lakh 40,000. 44 lakh 40,000 minus 36 lakh. Okay, this would be how much? This would be 8 lakh 40, right? So 8 lakh 40,000 rupees is the amount which I am receiving. This is inflow, therefore I'll be writing it as positive amount. After this, do we have anything else? Any interest or dividend which we received? Look at the P&L account. Yes, anything else which we have? That's all. All right. So is there any dividend which we paid? Okay, so somewhere that given information about the dividend paid, right? How much is it? I think somewhere over here. Yeah, here it is. Look at this. Dividend declared and paid during the year. This amount is actually paid. Okay, so dividend paid to equity shareholders. Okay, this is an outflow, right? 7,20,000 rupees is the outflow. 7,20,000 rupees. This would be the outflow for us. So how much do we get? This would be the net cash flow. Okay, so net cash flow from financing activities. This is the net cash flow from financing activities, 1,20,000 rupees. All right. Now we just need to check out the total cash flow. Okay, so total cash flow from all the activities. Okay, so the net cash flow from all the activities. How much do we get? We just need to consider all the three: cash flow from operating, financing and investment activity. This would be again 1,20,000 rupees only. Now to this I'll be adding the opening balance of cash and cash equivalent. Add opening balance of cash and cash equivalent. Okay, so when I'm adding the opening balance of cash and cash equivalent to this, I should be getting the closing balance of cash and cash equivalent, exactly the amount which has been given in the balance sheet. Now what is the opening balance of cash and cash equivalent? Yes, look at this. Cash and cash equivalent, somewhere that given, right? So cash and cash equivalent at the beginning, if you see, it was 6 lakh rupees, this amount. Okay, so this would be 6 lakh. I'll just add this 6 lakh rupees. So once I'm adding this 6 lakh rupees, I should be getting exactly the same amount which has been given as the closing balance. Okay, this would be the closing balance of cash and cash equivalent. 7,20,000. Don't you think it's the same amount? Look at this. 7,20,000 is the closing balance of cash and cash equivalent. If this is the exact amount, it means the cash flow statement, whatever you have prepared, is absolutely correct. Okay, just check out the solution. Yeah, look at this. 7,20,000 rupees is the answer. Hope you guys understood this illustration. Simple, right? So just understanding the concept and application of the same. Okay, so nothing new. So these things, wherever you guys are confused, guys, just prepare this particular ledgers. Okay, so these should be forming part of your working notes. Okay, and I hope you guys understood this particular calculation also. Okay, so how exactly did we get the amount what we received? See, this is the original cost of the asset which they have sold. They are not telling that this is the amount which we received when we sold this particular equipment. No, this is the original cost of the asset which was actually sold. Okay, so by adding this profit, this is the amount which we would have received. All right. Okay, so let's look into this next illustration, that is illustration number 13. How many more illustrations are left over? We have got 13, 14, 15. Yeah, that's all. Okay, so we have got 3 illustrations. Okay, let's just look into this illustration number 13 first. So these are the full-fledged illustrations pertaining to cash flow statement. Okay, so probably these are the advanced illustration wherein they would have given little more adjustments. Okay, so let's look into this. So they have given you the balance sheet. Okay, as on 31st December 2021 and 2020. Okay, so 2 years they have given. Be careful with the dates. Okay, this is current year and this is the previous year. Okay, so this would be my current year and this would be my previous year. All right, so they have given the equity share capital. Okay, so from 1,250 it has become 1,500. Probably 250 worth of share we would have issued. Reserves and surplus. Okay, so from 1,380 it has become 3,410. Non-current liabilities, long-term borrowings, from 1,040 it has become 1,110. So current liabilities, we have got trade payables, other current liability and short-term provisions. Okay, these are the figures. We'll be checking, okay, whether there is increase or decrease in the current assets and current liabilities. That will be doing it. Then in the assets, we have got property, plant and equipment, 730. At the end of last year, it was 850. So it means you would have sold, or after depreciation, it would have reduced. Non-current investment, that is long-term assets, it is same, 2,500 in the previous year, and this year also it is the same. Okay, so current assets we have got current investment, inventory, trade receivable and cash equivalent. Okay, so we'll be looking at these figures, whether it is increased or decreased. Note, relevant items of assets and liabilities are reflected in the balance sheet and schedule 3, hence sub items are not having any value for the given illustration is not shown. Okay, so the items wherein there is no changes, they have not prepared the notes, just like the previous illustration. So other current liabilities with respect to interest payable. Okay, so here they have given other current liabilities, right? So this is nothing but the interest which is payable, and then short term provision is nothing but the income tax payable. So you remember the provision for income tax ledger which we prepared, same concept will be applying even over here. When it comes to property, plant and equipment, we have got fixed assets. Okay, so last year it was 1,910, current year it is 2,180. Accumulated depreciation is being charged over here. Okay, so other current asset is nothing but the interest which is receivable. Last year nothing we had, current year it is 100. So statement of P&L account they have given, sales 30,650. All the amounts are in thousands. Okay, so all the amounts are in thousands. 30,650. Cost of sales, it is 26,000. Gross profit 4,650. Depreciation has been given 450. Then administration and selling expenses, interest expenses, interest income, dividend income, foreign exchange loss, net profit before taxes and extraordinary items. So extraordinary item, insurance proceeds from earthquake disaster settlement. We are receiving this amount. It is an inflow. So the total profit, net profit after extraordinary item is 3,530. Income tax for the current year, it is 300. This is the net profit after tax. Okay, so let's look into the additional information which has been provided. An amount of 250 was raised from the issue of share capital, and further 250 was raised from long-term borrowings. See, share capital, if you just compare the closing of last year and the current year, you will get to know how much is the value for which the shares were issued. Okay, so same way interest expenses was 400, of which 170 was paid during the period. Out of this 400, this is the amount which was actually paid. So when you are preparing the cash flow statement, you will be focusing only on the amount which was actually paid. So 100 rupees relating to interest expenses of the prior period was also paid during the year. Okay, so 100 rupees relating to last year. See, when we are preparing cash flow statement, doesn't matter whether the transaction is related to current year, last year or even next year. Any amount which we pay will just be showing it. Okay. So then dividends paid was 1200. This would be cash outflow from financing activity. Tax deducted at source on dividend received included in tax expenses 300 for the year amounted to 40 rupees. During the period, the enterprise acquired fixed asset of 350. The payment was made in cash. This is outflow. Plant with original cost of 80 and accumulated depreciation of 60 was sold for 20 rupees. Foreign exchange loss of 40, okay, represent reduction in carrying amount of short-term investment in the foreign currency. Designated bonds arising out of the change in the exchange rate between the date of acquisition of the investment and balance sheet date. So this particular foreign exchange loss, okay, so it has been reduced from the carrying amount of short-term investment. So short-term investment, whatever they have shown, they have reduced this particular foreign exchange loss of 40. Sundry debtors and sundry creditors includes amount related to credit sales and credit purchases only. Okay, this is the question. They're just asking you to prepare the cash flow statement. Okay, just go through this particular illustration. We'll be solving this. Just go through it. Illustration number 13, right? Yeah. Just go through the adjustment specially. We'll be solving this. Alright. So this illustration number 13 we'll be discussing it in the next class. Okay. So there's an important work for which I'll have to leave now. So make sure that you guys glance through these two illustrations which we solved in the today's class 11 and 12. So probably by tomorrow we'll be able to complete the remaining few. Okay. So question, although we have discussed, we'll be repeating it again in the next class, and then probably in the next class all these other illustrations will be solved and this will be concluded. All right. Thank you so much guys.